Today's number is 100, and the reason, well, it's been over a century since we've seen diamonds this cheap, and it all has to do with supply and demand dynamics. So why does that link back into Wall Street and what they're doing right now? Well, as we've been discussing in the last 2 to 3 weeks on this show, we've been talking about rotation, and even the mag stocks have started to see that. Google being a big winner of the last 24 hours, and also Apple playing catch up. We first found that by looking at some extraordinary charts. Well, there may be one that's even more wild, and that is the new call for a 54 times gain on one particular crypto. Could it really happen? And more importantly, what do we need to be looking at this chart for that has similarities to 2006 and 7? Well, guys, we'll break it all down together as we go through stocks, commodities, and cryptos. Don't go anywhere. There's a lot to get into. See you soon. Well, welcome back everybody to The Daily Show. My name's Thomas Atkinson, and in today's video, we'll be taking a look at the latest macro data, the big dark pool flows from Wall Street, and of course, the key charts that you need to be watching. Now, what we've been talking about over the last month has been rotation, and Wall Street has been doing it in Q3, moving into the laggards in terms of the Mag 7 stocks, and of course, starting to show up in signs of value and other areas. But could there still be massive opportunities in front of us? Metals going ballistic over the last couple of days certainly has probably quite a few of you pretty excited. I saw in the comments down below over the last 24 hours, some of you have done very well. Congrats to you, but just remember, if you weren't in those positions, there's always another one on the horizon. Let's first talk about a bad position though, and that is if you've been buying big diamonds, because they are hitting century low prices, and the once cornered market of the whole diamonds are the girl's best friend have now, of course, been shattered, as fake diamonds or lab-grown diamonds are totally destroying the price of this once, well, I guess you would say, monopolized industry. So why does that break down back to Wall Street? Well, there are some cracks starting to show on Wall Street as well. In fact, Ray Dalio just came out and said that he believes America's debt-induced heart attack will happen under Trump 2.0 and that no one's brave enough to stop it. Now, in some ways, I think there are debt problems, of course, underneath the hood that are getting really wild. In fact, I actually talk about this in our advanced course, and it's all part of a cyclical nature of markets. It doesn't really have anything to do with politics. It just has to do with the way that most of the time we push money systems. It's actually happened over hundreds of years in very similar ways. Now, why is this all important? Well, of course, we're starting to see some of the macro signs of slowdown. And I think it's really important that when we talked about the insider transactions of the last week, which a lot of you said, well, does that mean a market's selling off right now? No, it doesn't. It generally means that it's stuff to be wary of, stuff to look at, but ultimately follow the price action. It's kind of similar to this one here, quits in construction. Now, we wrote over on our X account that construction quits can be seen as a leading indicator. The latest numbers have just dropped for July, which tends to usually be, of course, higher. And think of quits as a confidence meter for workers. When builders walk off a site, they believe better pay or work is out there. When they stay put, the markets are tightening. Today's quits and constructions are at levels just seen before 2006, 2007. So let's actually have a look at this chart here, and shout out to Tony is here for you over on X. I do know you follow me, Tony, but you probably don't know I found your chart today and I thought it was pretty cool, which actually shows US real total construction spending year-on-year change. And this actually is pretty cool. So what it actually tells you is that we've seen something similar to this happen before a slowdown that occurred back in 2019, which obviously needed, guess what, federal support. So the Fed, of course, came out and did interest rate cuts. Well, a similar, in fact, new low has been formed, and this last happened around 14 months before a recession was induced in the economy. So why is this important? Well, of course, most of us all know that these markets are heavily priced, but we're also seeing the biggest bulls right now call for the biggest levels. We're seeing insiders sell at faster rates than they've usually done. By the way, an incredibly early signal. In fact, Bill Gates started selling heavy amounts of Microsoft back in 1998. Famously, in 1999, of course, we saw Mark Cuban sell his company and then put big puts against his Yahoo stock. And all of these things kind of have those similarities with them. Now, is it time to panic? Well, generally speaking, probably not, because of course we look to the bonds market and we say, well, has the bond market flinched? And the answer is again, no. We haven't seen the bonds market flinch since, of course, earlier this year when we saw the tariffs implemented, and it's back to complacency. It's all chill, it's all green, it's all good until maybe it isn't. Now, have we seen an activation of the bonds market freaking out? The answer is again, no. And we've seen similar things such as this before, of course, the dot-com bubble and before the global financial crisis. So it's kind of like the calm before the storm. You ride the trend, you hope that you can hold on to the best profits, of course, that are possible. And then you also hope that you know when to potentially get out. And that's all going to come back to tracking the correct stuff. And some of those things we, of course, cover on this channel. So make sure to subscribe for that. So guys, what about yield curves? Well, this is another story going around. This is from Sentiment Trader, and it shows you here the 2 and 30-year yield curve starting to steepen. Now, this has historically been a problem because basically when you see this yield curve steepening like it has been, it shows a problem underneath the hood. So is again this going to be the storyline? Remember, we saw uninversion of yield curves happen now, about 12 months ago. And historically, it can be an early signal by upwards of 2 years. Remember, most people forget about it once it's happened. So it's important to remember these and never lose sight of some of the most important reads out there of all time and how they've generally been historically correct. Remember, when everyone goes ballistic and starts calling for, let's say, 10,000 S&P, that's probably the time you want to be most terrified. We're getting close, but most people are still in the 7,500s to 8,000 calls for the end of 2026. JP Morgan clients are also starting to get worried about markets, but this doesn't necessarily mean it's going to crash. They actually have just added the highest amount of short positions coming into historically the worst month of the year, which is September. And that's a pretty big call by them. So one of the fastest moves here into puts shows that a lot of people are concerned. And the reason is probably because everybody thinks it's a bubble. Now, when everybody thinks it's a bubble, I unfortunately have bad news for the bears. Generally speaking, markets do not crash when people call it a bubble. In fact, we did a search recently on Google and we found that search terms for bubble have astronomically climbed. In fact, I'll update that soon as we get the latest data. It is totally wild what is going on in the world of people searching for bubble. But when people think it's a bubble, it's usually got a little bit more to go. It's when people say, oh, well, this is all stupid, don't worry about it. We just get in, we get out, it's YOLO time. That's when you want to be most concerned. And something similar actually happened in the 1990s. Now, this one here from Mark Ungewitter basically shows you something very, very similar. It shows you that if you overlay a 1998 chart with a 2025 chart, you actually find that we've got a very similar V-shaped reversal. Remember, we used this earlier in the year. We didn't quite get that double bottoming effect, but we did actually pull back to a 61.8 fib and then rally back up. And we actually usually go higher. We often see pullbacks. Funnily enough, that would put a pullback here for January, which is still plausible. Maybe Q3 is just more of this pit style market. And then we get this type of pullback. And then we start to get lower returns, but it's ballistic. So it's like up 5%, down 7%, up 10%, down 7%, if you get what I'm saying. So that often high volatility near the end of a run could be where we're at. And this actually points the market towards a maxing here of around September 26 or February of 2027. So that actually would be in line with a lot of people's bullish calls at this point. So what about the probability of a 25 basis point cut? So of course, a lot of this can be actually worked out with structure post a cut. Well, that's getting close to 100% according to the latest economists. And although we don't really use that as a good read here, you can see according to Tom Lee's latest data, which is very similar to what we had back last year as well when we were looking at it, that if you overlay a couple of periods, e.g. 2024, where we saw, of course, a Fed cut, we got a bit of a sell, then we got a huge rally off that, or we overlay, funnily enough, 1998, sound familiar, guys? We actually get a bit of a pullback and then a huge rally off that. If you overlay both of those, you'll find that there's a good chance here that we might have a rising VIX. We might have, of course, some volatility that comes through, but that it actually could bring in a positive September overall. So this is kind of the funny thing about markets at this point. We've got heaps of people loading into puts whenever possible. We've got heaps of people going for, big crashes coming through right now. Again, we think probably it's more of a pit and the market is rotating underneath the hood. And at this stage, everybody is, of course, really polarized in either direction. Even the latest sentiment surveys, which we've stopped covering because I think they're political at this point, have been showing that the amount of bears in the market is actually incredibly high and statistically up there. So are we going to see a market that finds a lot of volatility? I think so. And at the same time, there's probably going to be a lot of rotation opportunities. So where could some of these rotations come in? Well, you guys have seen me bring up this chart tons of times, and this has to do with, of course, the crypto markets. Now, one of the things about the crypto markets is they do tend to run in cycles. And one of the cycles that is very, very common is some kind of Bitcoin sell around this August into September period, followed by a Bitcoin price hike that goes to a new all-time high, and then an alt season. And we haven't seen the alt season yet. So usually before the end of a crypto run, you have to see ballistic runs in all sorts of trash that you've never even heard of. And people need to be in meme stocks and meme cryptos and all sorts of things like this. We haven't seen that in the crypto market yet. Another telltale sign of these cycles playing out is usually the alts, as in the big ones, Ethereum and of course XRP and others, do hold better while Bitcoin is seeing this sell-off in the August, September, kind of October period. That's where it's happened in the past. And this has a lot of people speculating on how crazy can things get. Now, I thought this was wild when I first saw it, and I do think there's the law of diminishing returns. So 54 times would be pretty wild. But Tom Lee's obviously very, very bullish Ethereum. I can understand that Ethereum, of course, has this Wall Street use case kind of concept here. But if it did 54 times, I think it would end up being at around $75,000 from the 1.3 to the 75K. So this is the 1,385 to the top. Now, could that happen? Well, I always go with, can market capitalization absorb that? And I think if you work out the market cap size of Ethereum at that level, it would be obscene. So I think it probably can't. The law of diminishing returns always shows that this is the tending thing to go through here. But the fact is that a lot of people are going to be incredibly bullish on some of these alts should they break out of these key hold levels. And of course, that should then flow onto alts. So this is going to be a smaller alts, that is. So this is going to be pretty wild. Another story of having conviction has been Google. Now, if you've been watching the channel for a while, you'll know that I bought up Apple, Tesla, and Google. And although I have, my own opinions on each one of them, I did say that Google was was the cheapest and still in many ways is fundamentally the cheapest on the market in terms of the mag stocks. And the reason is because when you just look at the fundamentals, it looked pretty good. Now, it's had a bit of a win over the last 24 hours, obviously, with one of those court scenarios. But Google here is still trading, according to Gainify, at a 15% discount to its S&P 500 track price. And it's still definitely underneath what I would say is a very lofty price for a stock like this one. So it just shows again that if you have commitment towards your trade and confidence towards your trade, kind of similar to the confidence that I guess we've shown here in some of the metals such as gold, silver, Bitcoin as the holy kind of trinity of against fiat kind of currencies, or even the Chinese stock market. If you have confidence in something and it's based on a really good structural thing, you usually want to be doing what other people aren't, but with flow. So you want to be seeing that flow coming through. Remember, Google's price action was already showing improvements. Now, over the last 24 hours, I would say an astute buyer, either this bro over here or possibly this one more recently, has most likely transacted some profit off the table. Now, that's not to say that Google's done, but of course, they're selling into that hype. And you can see the third largest transaction ever recorded on the double Google or the 1.5 times Google ETF was just closed out most likely. And that, of course, is a good gain. But it's not so much that this dark pool shows anything that's interesting. It's just kind of showing you again that when price action improves like it did, when flow changes, you can get that kind of nice run through. And confidence is key, guys, when it comes to these markets. Now, from Mike Zaccardi here, according to BlackRock, they've got some tactical reasons that they're looking in terms of conviction. If you guys are interested, I just thought I'd bring it here so you can kind of read that and pause the video. But from my perspective, I think what's kind of happening here is markets are shifting to different areas. So we've seen Google, we've seen Tesla, well, not so much Tesla, Apple pick up in terms of the Mag 7 stocks. Then we've seen, of course, China stocks starting to get focusing on them. And if you actually have a look here, the overall Chinese 300 and MSCI China index is actually still trading way under its all-time highs. So if a lot of funds are underweight these markets, which I think they are based on some of the stats I've seen, could they be playing catch up in the future as they try to chase gains? These are the types of things. Remember, if we do see a market crash, it's going to be a world crash. It's not going to be just some type of, oh, yes, we're crashing in America or we're crashing in Europe or anything like that. It's going to be across the world. Another one has been, will value start to outperform growth? Now, that has historically not been the norm. And generally speaking, you do not want to do that. I mean, value here, you can see, is predominantly terrible versus growth, except during the right time. So there was actually a period here after the dot-com bubble where value outperformed for quite some time. And then funnily enough, we lose a decade. So that's a lost decade. And then value becomes trash for the last kind of 15 to 20 years. So why is this important to factor in? Well, sometimes near the later end of things, you can see value start to pick up, and we have started to see some rotation into that. Another one has been gold, and we'll look at this chart later on in today's video, but gold, as you can see here, guys, improving off this pennant. So that could be going up towards 4,000. And we've seen, of course, a lot of transactions coming into semiconductors. Have a look at all these semiconductor transactions. And that suggests that the run there kind of started to slow down. And again, money has been flowing into other areas. All right, well, let's jump into the charts now and have a look at the S&P 500 to start off with. Now, we've got non-farm payrolls coming on, of course, Friday, guys, which is going to be a big event. In terms of the S&P, it is still in a bullish trend. Some people will be calling this a double top possibility. Sure, if we lose 63.50, then we could be dropping down to 6,200. And obviously, the advanced decline line is just sitting chill at this stage. But you do need to remember this has actually been a relatively strong bull buy up. And that's because 6,400 has so many puts on it. And we'll get the latest data on that in the next video, so make sure to sub for that. But you can see here, nice pickup on the markets. And indeed, although you can see here in the futures, the market has just basically been showing wick purchase, wick purchase, wick purchase, which suggests that at this stage, the pain trade is trying to go higher on the S&P. So more rotation, more movements into other stocks and markets and other sectors of the market. It's kind of just like slowly grinding higher. But you can also see now how important it's going to be to mark out that 63.50, because this is where you've seen so much buying pressure. The market falls underneath that, you're going to go negative gamma because 6,400 has so many puts on it. And then we could move towards 6,200 very quickly. And of course, if we lose 6,200, which in most people's scenarios probably won't happen, is like that's what the people don't want to see. That's kind of suggesting that you're actually seeing a bit more of a panic sell. So remember, from the top to 6,200 at this stage is actually around 4%, which is very garden variety style pullback. If we follow the 98 narrative, we'll actually end up a bit more bullish, and that would actually mean the January sell-off was in order. I still expect Q3 to be very volatile and up and down and all around, and opportunity to be out there though, guys. So of course, continue to follow because there are opportunities. Let's speak about a few of those right now. Now, a lot of people look to the Dow Jones Transportation Average and they say, well, this hasn't made a new high. Is it going to? And it's been sitting for quite some time. So you can see here, Dow Jones Transportation Average sitting around this 17,000, hasn't recovered to a new high. It's certainly struggling. And you'll actually notice I've just put in some highs here from previous periods. And you've got kind of the 98, 99 narrative, funnily enough. You've got the 2007-8 narrative, again, funnily enough. And then, of course, you've got the 18 area. And you'll note that this period here, we had tariffs, and we also ended up getting Fed cuts during that time as well in 2019. So kind of similar scenarios in some ways, but certainly a market to watch. If it breaks to a new high, it does tend to be quite an aggressive back-end run. So certainly something to be watching there. Another chart to be watching if you're a crypto fan is, of course, MSTR, because this is the poster child of, one of the big Bitcoin movements here. And it's, of course, continuing to weaken. I think that's because of saturation across the board, but it's certainly one that you'll want to be watching. And another one you'll want to watch, guys, is IWM versus SPY, which continues to show here that the Russell is holding lockstep with the S&P, if not improving against it. And if this keeps happening post-rate cuts, remember, we've got a chart that we shared in our previous video, so go check that out if you haven't seen it. It actually shows that over the next 3 months, if we see that kind of movement, there could be a real warning sign that we're in that later cycle. And maybe that 14 months isn't that stupid in terms of seeing a market that goes runaway, goes ballistic. Everyone, yells about how fantastic everything is. Remember, for a bubble to pop, everyone has to be all in. And then all of a sudden, we've got a real problem on our hands. Another chart to watch is our top 10, what took us up here. So, of course, if that is lagging, which it currently is, shows us again rotation is underway. And unless we're seeing a problem in the bonds, we're not really getting a major issue. Now, semiconductor SPY is also another major one. This again shows rotation. We've been talking about this for quite a while, 2 months now, in terms of thinking semis are probably chilling for a bit, and they have been. They've been slowing down. And then, of course, you've got the yield concern, 5% plus. What happens there? Probably more of a discussion post jobs numbers this Friday, so we'll bring that up soon. Now, what about gold? Well, gold made a new all-time high. It's consolidating now. That is A-OK. There's no problems with that. It may even come down a little bit before rallying higher. I'd like to see it go to 3,700, 3,750, and then ultimately a 4 to 4.2K maybe next year. So this is, a big move here on gold after a huge coil, symmetrical or pennant. It's looking all right. Silver's doing something similar. Silver actually almost hit one of my first major targets, which was 42. So you can see here, it's getting a bit of exhaustion. Again, perfectly normal. Trend still intact on both of those. Energy also sold off a little bit here after rallying to a new high. So you can see energy stocks coming back down to that demand zone. It'll be good to see them find bid again over the next few hours and possibly the next couple of sessions. We'll see how it goes with the jobs numbers. And again, check that semi out because make sure you're watching the semis, guys, and NVIDIA as the stock. Because if NVIDIA drops, 170, then all of a sudden you're opening up 155. That then gives you that kind of pullback to 6,200. And then we'll really find out what kind of bull is around. So I think at the moment, the big opportunities really are just finding the other markets, finding the other opportunities out there. Tesla, again, up, down, all around. 320 on the put support, 350 on the core wall. And Chinese markets showing their first signs of weakness. So this is the first sell we've seen in quite some time in an epic run that's been going now for the last 2 months. And again, it's pretty normal for this type of thing to occur. If you've ever looked at the Chinese markets, you'll see that. This is the kind of thing I'd like to see, though. Like high volatility, but still, relatively speaking, trapped. Because if it doesn't do that, so at the moment, of course, it's still only just one sell candle, but you want to see it kind of do that because that is the type of thing that's happened in the past. So, okay, we can have volatility, but you want it to hold within a range decently and then ultimately not be doing this for too long, maybe 3, 4 weeks, 5 weeks, that kind of thing. Probably some good opportunities coming on the Chinese market moving forward. And NASDAQ, of course, pressured again, the 23,000. Failed to do anything with that this week, and a lot of people have this as a head and shoulders. I wouldn't short something like this just because you can say, it could be. It hasn't activated anything. It's still in an upward trend, even with a lower high. What instead this can tell us, and it already has, is that there were better opportunities out there in the markets in terms of things like equal weighted market. So RSP doing better than a lot of the others. Value, and of course, other things as well. So there's always other opportunities out there. Now, speaking of the Ethereum thing, you can see here the structure is, of course, quite tight. We've been trading between around 48.50 and 4,000. So it's holding pretty firm. Something like Solana has been, of course, holding more into the upwards momentum here. And you can kind of see that the crypto market is doing what you would expect. Volatility markets, yes, it is a little bit more volatile, but not really the stuff that you'd write home about. And in terms of the big one, which is Bitcoin, it hasn't broken 114,000. So until that happens, it really is still a series of lower highs and lower lows. A lot of people are calling for 105, 98. You probably just don't want to see this thing in the low 90s. That would be a problem. So for now, it's really just, okay, do we see a change of trend here? Is jobs numbers going to be the big one? And I think it's probably going to be at least some form of momentum switch. So just remember, guys, this Friday in New York time, 8:30 a.m., we're going to see the jobs numbers. It's really about the last two revisions. I don't even know if I really would pay any attention to the actual number, but let's pay attention to the flows and the movements. If you enjoyed today's video, then remember to subscribe, smash that like button, guys, if you can. And of course, check out some of the other things we do over on X. Follow me on LinkedIn, those types of things as well. Thank you so much for watching. We'll catch you for now. Bye, guys.